Good evening, everyone. Uh, Good evening to our distinguished guest, CA Bharat Garg, fellow chartered accountants, and esteemed participant joining from across the country. On behalf of the Internal Audit Standards Board of ICI, I extend a warm and heartiest welcome to each one of you. After the intense tax audit season that just concluded, this session comes at a perfect time when members are looking to explore new opportunities and broaden their professional bandwidth. Internal internal audit today is not just compliance or transactional checking. It is insight, foresight, governance, and value creation. It empowers organization to take better decisions with confidence and clarity, backed by data and risk intelligence. We are privileged to have with us distinguished leaders of our institute and an eminent speaker who has shaped audit excellence across global organizations and diverse sectors. CA Bharat Garg sir is a chartered accountant and company secretary with over 2 decades of experience in internal audit, compliance reviews, investigations, risk management, and revenue assurance. He is also a certified internal auditor and is currently pursuing CISA. His professional journey includes leadership roles at Deloitte, PwC, Fidelity International, Vodafone, Royal Bank of Scotland, BSNL, to name a few. He currently heads the audit function at Guardian India, the Indian arm of 165-year-old American insurance firm. His, his experience spans across BFSI, telecom, manufacturing, FMCG, etc. He is currently secretary and board member of IIA India and board member of the IIA Delhi branch. Earlier, he served as an immediate past president of IIA Delhi and led the publication Internal Audit Today. With this, let us welcome CA Bharat Garg sir. Sir, the virtual stage is yours now. Thank you.
Thank you, Vipul, for the nice introduction and good evening, everyone. It's an absolute pleasure to be here amongst all of the fellow professionals today here virtually. And I'm quite excited to say the large turnout and that too over a working day. I would say that this is this gene of ours that keeps our profession quite dynamic and future ready. I'm honored to be a part of this journey. I would also like to thank our institute, IASB Standards Board, our President Nandaji, Vice President Prasannaji, IASB Chairman Mr. Chandrasekhar, and Mr. Ravi, who couldn't make it because of some other engagements, as I have been told, and Vipul and the entire Internal Audit Standards Board team, Arunji and Arti ji, for giving me this wonderful opportunity. Okay. Now, before we begin, I'm sure you know all of us are die-hard sports fans. Maybe cricket, maybe hockey, or maybe something else, as per our own choice. And as we would notice that every match, every game, it has got a referee. Now, think of the role of a referee. No one notices them when everything is going fine, the game is going fine, they don't make a mistake. But the moment they make a mistake, what happens? The newsroom gets active. We see a lot of heated discussions. They are all over the social media. Multiple memes start floating around and they are being trolled. Somehow, same is the case of internal auditors. No one notices us when things are going fine. But if we miss something, then all the stakeholders, the regulators, they like pounce upon us. And we are asked the dreaded questions, where were the internal auditors? In one of my previous organization, there has been an instance wherein, you know, that has happened to me, of course, to my the global CAE. But yeah, we have faced such kind of scenarios in the past. So during this session of risk-based internal audit in a disruptive environment and auditing emerging risk, let's talk about a bit how we can stay ahead and add a tangible and more visible value to our stakeholders. Uh, Before we begin, I would also like to state that unfortunately, I have a very bad thought. The show will keep on going, but I might have to step off and mute myself and shut out down video for few seconds to catch a breath. Apologies in advance for the same. uh, Let me share my presentation. Vipul, I hope this is visible.
It is okay, sir.
Okay, thank you. Now, this entire presentation is divided into four broad parts. We will start about the background and a bit about risk-based internal audit. Then we will move into the concept of some of the disruptions. We will also look at the risk-based planning process. And in the last, I will take you through an example as to how do we do it and or basically, I'll share my experiences while working on a risk-based internal audit planning and risk-based assessments in the past. Throughout the course of this presentation, I have taken multiple references of standards of internal audit issued by in, Institute of Chartered Accountants of India. However, we will not delve into theory too much about it. So I'll just skim through it or just highlight the specific aspects. Okay. So that's the definition of internal audit as per the ICI's framework, which governs the internal audit. I have highlighted some of the aspects. I'll talk about independent, which is very, very basic. And in case you are wondering as to why I am picking up independent and talking about independence to a bunch of, I assume, all the internal audit and risk professionals who are participating in this seminar. So it's largely because I would want to stress upon that independence is not achieved through the position or the organizational hierarchy, but it's a mindset. Now, apart from ICI, there are multiple other professional organizations which are working in the field of internal audit. So, one of them, in case some of them work for MNC organizations and wherein you are following up. So, is pushing for more of advisory services as a complement to the assurance framework. So, as I say that those working in the MNCs would have been privy to it. So as per the requirements of IA, around 50% of all the assurance, all the engagements should be advisory in nature. I am also seeing a lot of such kind of experiences in my organizations or in the past organizations wherein I have worked. As we see, there are large, big ticket strategy programs, large scale, projects, large scale digitization projects, which spread across multiple years. Huge investments, multi-million dollars are being spent. So it's imperative that management would not like to do a post-mortem exercise by the internal auditors. They would like to do it right first time, and hence prefer to engage internal auditors at a very early stage. So there in those kind of scenarios, it's very imperative for internal auditors to ensure their independence. So if somebody is engaged into any of the advisory engagement or some of the steer course for these large projects, then they need to be mindful as to how to maintain their independence and objectivity. Next is internal controls and risk management. Internal controls is very quite self-explanatory. However, a large number of organizations, especially banking and financial services industry, they are moving towards three lines model. Now, with respect to three lines model, the responsibility of risk management is cast upon first line, the standards are set by the second line, and IA continues to be the third line as an independent assurance and advisory function. In this case, it's important again for internal auditors to ensure that they also opine on the risk management team. So be it the first line and the second line. The last within this category is enhance governance and achieve organizational objectives. So with respect to governance, so that's very again self-explanatory. It's a set of relationships between the stakeholders, between the organization, the compliance with laws and regulations, and organizational objective. That's our key objective, be it the organization's short, medium, or long-term objectives. Also, I would say that in the current age of disruption, where the risks are very unpredictable and the risks change pretty fast and they are also very interconnected, it's imperative for internal auditors to anticipate, not only anticipate or sometimes evaluate all the emerging risks, adapt to all the volatility factors, and become catalyst for resilience. Basically, being an internal auditor and doing risk-based internal auditor in the current organization, in the current dynamic environment, it's no longer a choice, but basically it's like a compass for supporting organizations navigating all the uncertainties in the current world. I would be spending some time on risk, though it seems very simple, but we will be talking through multiple nuances of it and few of the examples. As you can see, I have highlighted two aspects. One is the probability of threat in case there is any event or there is any impact. Now, if this is the definition as per ICI SIA 130 risk management, but if you look at the definition of risk as per IIA or COSO or ISO, you would realize that broadly it's the same. It all talks about that risk is a function of impact and probability. Now, when we talk about impact, it may be financial, it may be non-financial, and we have got a slide to talk through it at a later stage. But more importantly, it's like what may go wrong and what should we be bothered about. With respect to likelihood, it is the probability and the frequency. So, say for example, earthquake. Now, earthquake may happen, once in a while, but the probability of it happening is pretty low. So when I am devising my risk management procedures or putting in place the internal controls or developing a business resiliency, I'll be mindful that, earthquake probability is pretty less. If you'll notice, the shared services or large corporates which have set up GCCs or shared services in India to promote business resiliency, they typically have two or three centers. Now, if you look at Delhi, Delhi is on tectonic plate 4, which is a high earthquake zone area, where in Jaipur, which is pretty close to us, but it is on tectonic plate 3, or areas like Bangalore, Chennai. That's the reason you will find that the shared services are very widespread so that risk like earthquake may not impact. So that's one of the ways, how we will put in place the risk management procedures. Another is like cyber attack, which may again happen, at any point in time. Operational errors, which happens multiple times a day, but which have very limited impact. Also, herein as we'll see that risk, as the nomenclature or as we talk about it, it's basically talked about in a very, very negative connotation. However, the impact, it may be both positive or negative. Say, for example, in a financial services, a trader dealing in derivatives or in stocks and equities, it oversold because of lack of controls or whatever system going haywire. They oversold it more than what has been approved by the portfolio manager. But because of the global meltdown or maybe a good fortune, the markets meltdown, the markets dipped down, and ultimately it resulted in a positive impact. Another thing which about the risk is that when we evaluate the risk, be it the second line evaluating it or first line evaluating it as part of the risk assessment, or it is an internal auditor evaluating at the beginning of an audit plan defining exercise or at the beginning of an engagement, there are multiple aspects which needs to be looked into it. So you may call them attributes of risk. Say for example, one is velocity. How fast the risk will come up. Say for example, fire. It spreads very quickly, need to be contained very quickly. Within fire also, a fire within a workplace or fire within a data center, you need to put in place different set of controls. As you would have seen, there are uh, altogether different kind of fire containment measures which are put in place in the IT center or in the data hub. Wrong payment. In case we make a wrong payment in our day-to-day life, or banks or financial services makes a wrong payment, then what do? We immediately collect, try to contain the risk. We immediately try to contact the recipient or send instructions to the recipient bank to hold on the transactions. If we talk about IT, so like zero-day vulnerability. So once a zero-day vulnerability is exposed, how quickly an organization's IT department gets into action to contain it. Some may be slow, some may be fast, and that all will depend, how much an organization will be impacted. Uh, Another attribute for risk is frequency, how often the risk will appear. So we discussed an attribute of earthquake, or basically an example of earthquake. We also spoke about fire. Currently, we are seeing that there are two or three wars going on across the world, and geopolitical risk is at a very high risk. On the other hand side, there is an operational error, which may happen quite frequently. The next attribute which we'll talk about is the volatility. So the best example for volatility is the change or fluctuations in the prices of commodities. Recently, prior to Diwali, we would have seen the prices of silver crossing 2 lakh per kg mark. Now that impact some of the organizations very, very severely. Sorry. Yeah. Say for example, green energy. Now all the solar panels, they have some amount of silver embedded into it. So if the silver prices increase, there is a direct impact on the green energy sector, or the companies manufacturing solar panels. Also, interdependence. How quickly, the risk events or the risk, they are interdependent on each other. Like last year, one of the low frills airlines of India, it was in bad news for multiple near misses, multiple, incidents, and it was all because of, the rising oil prices. The oil pricing were rising, which is a key component in the cost of any of the airlines. It led to squeezed liquidity and the cash flows. The airline started, that's what came in the news. The airline started spending less onto their maintenance and repair operations, and ultimately more incidents coming into picture. What it leads to? Regulatory censors, regulatory investigations, loss of customer trust, which has been built over a period of time, and of course, it again leads into the financial losses. Uh, Persistence, that's another attribute. How long will it continue? The classic example is COVID. It spread across for around 1 to 2 years, and there was a huge impact onto the short semiconductor chips. They were in short supply, and it hugely impacted all the IT services company, IT components company, and it also impacted the automobiles sector. Also, in case there is an ERP system which is outdated and the organization is still working onto it, so what it may lead to? Multiple inefficiencies, multiple operational errors, and there is a lack of opportunity to integrate with the other business units or in case of any merger, with the broader organizations. Until then, it continues to be a costly affair. And the last is controllability. Can we control it? Can we not control it? It's very straightforward. Some are internal, which can be controlled. Some are external, which may not be controlled. For example, if the central bank or RBI increases the rates, it have a direct impact on the bond yields. Can it be controlled? Maybe not. One can only hedge the risk, but it's something which one needs to be mindful of. So all of these attributes of risk which we spoke about need to be considered when we are assessing the risk and finalizing controls or evaluating controls, as the case may be. Sorry, not sure how can I turn this off, captions. um Sorry, one second. Vipul, can you see these captions? How do I close this?
Just a minute. I'll just. I asked sir, can you help sir on this?
Can you see these captions coming up?
No, sir.
No captions are coming up. Okay, then
No.
fine. Then maybe it's only for me. Fair enough. Okay. Now, this is the evolution of internal audit from a traditional to a risk-based internal audit. This is very pretty straightforward and very self-explanatory. I'll just quote two examples, which will try to, basically those are analogies, um, which will help you guys understand the differences between the two. Will not go through this slide. Continuing from my example of sports, so few days back, I again watched the famous movie Chak De India with my kids again, and I noticed two things. So, in case of a referee, the referee focuses on whether the game is being played in line with the rules of the game, which are set by the international bodies or the sports bodies and which are predefined. So that's traditional internal audit. Risk based internal audit, again, as I said, it's not a perfect example, but more of an analogy. But what we noticed in that movie, for those who have already seen that, we saw Shah Rukh Khan, the main lead actor, acting as a coach, evaluating the opponent strategy, identifying all the strengths, weaknesses of the team, and that too during the game, during the championship as well, making sure that appropriate course corrections are done so that we achieve the objectives. The objective was to win the championship. Another example from our day to day life is from health. Now, when I was growing up, I don't recall my parents, thank God, God bless them, going to doctor for or to any of the labs for any preventive maintenance health checkups. They always used to go as and when there are certain symptoms or that cannot be cured because by over the counter drugs, and then they visit the doctor. And what doctor used to do is they used to treat symptoms. That's traditional internal audit. But what risk based internal audit is, that's the preventive health checkup. So basically, the preventive health checkup, it prevents the diseases. That's why there is a huge demand of preventive health checkups and people investing into it. Risk-based internal audit. This entire slide is again picked up from the ICI Basic Principles of Internal Audit, which is an addendum to the Standards of Internal Audit. Again, we will not go through the details of these slides. I would like to highlight, identify important audit areas. We will be covering it in detail. As I said, I'll be taking you through an example, so we can discuss it over there. But would like you to focus on these two words, detailed and curtailed. So it says wherever the risks are high, we need to prioritize it and we need to perform detailed audit procedures over those high risk areas. And something which is a low risk area, as identified through our risk assessments, it can be done through curtailed audit procedures. So, how we have been doing it, if I share my experience, so we have charted out a strategy, and that is, of course, we are a multinational. I mean, I'll be sharing it from my previous organization, which was more of a multinational company operating in more than 28 countries. So they are in multiple regulations come into picture, though we were largely following the standards of IIF standards. However, in consultation with all the jurisdictions and the regulations, we came up with a strategy wherein post our risk assessment, all the high risk audit objects or auditable processes, they were audited within a span of 18 months. All medium were audited within a span of 4 years. And with respect to the low and the negligible ones, we used to cover it via stakeholder discussions, via continuous monitoring, data driven insights, and so on and so forth. Sorry. Also, the standards specify the risk based audit shall ensure the following threefold objectives. Audit procedures need not cover the whole process. Say, for example, we are auditing any particular process, and we evaluate five control objectives, the typical five control objectives: unauthorized, incomplete, duplicate, delayed, and inaccurate. And we identify the controls surrounding it. We may not be required to audit all of those controls. We may restrict our testing even within an audit engagement itself to the high level risk. It could be to, so if it is a payment related process, we can focus more on the unauthorized or incomplete or inaccurate rather than a delayed one. Or if I am looking at a procurement process and considering the current geopolitical situation in Eastern Europe, so I may be focused to spend energies and the time on some of those suppliers or the third party suppliers which are essentially based in the Eastern Europe, just to get assurance around the procurement function or maybe some of the supplier resiliency related aspects. So rather than completing it in entirety, I may pick and choose the scope itself, or within the scope itself, post the assessment, i can I can cover some of the limited aspects. B and C are, I think, quite self-explanatory. C is basically that B is linkages to the aspects which are relevant and which are connected with company, broader company and the functional objectives. C is that we only need to report those observations which are of high probability, as all our stakeholders, they are pretty busy. Okay, these are the core principles of risk-based internal audit, and also highlights as to why do we need to have a risk-based internal audit. So, strategic alignment. What should be our audit priorities? Our core objective is to ensure that organizational objectives are being met and all the broad level concerns and the risk which may deter the organization which may deter the organization from meeting its strategy objectives. Adequate controls are in place to mitigate those. Now, think of Nika. It's one of the listed players. Few years back, it was a pure play online retailer, but over a period of and then of course the risk of an online retailer would be altogether different. Excuse me. Okay, but over a period of time, it has channelized into offline stores, brick and mortar model. You will see Nika kiosk being set up on high streets. You will see Nika being sold in multi-brand outlets and the shopping mall. So the risk associated with that omni-channel model is altogether different, and hence it's important for internal audit to keep on changing their priorities. Next is resource optimization, which is very self-explanatory. None of the businesses, or more particularly the audit department, they have infinite resources. They all have limited resources, and they need to deliver and achieve their own department objectives within those finite resources. Hence, it's very important to ensure that rather than following a cyclical audit approach, we follow a risk-based approach. I gave you an example from my previous organization about how we ensured that all the high, medium, and the low risks rated audit objects were covered in a timely manner. Also, with respect to resource optimization, I think of a game of Jenga. In case I'm sure most of you have played that game, wherein you have got multiple wooden blocks, and the whole idea is, or the objective is, to make a tower as high as you can. What do we do? As we move into the game, we keep on removing one wooden block from the bottom and making the tower higher and higher. Now, think of it from a resource optimization perspective or in a risk-based internal audit. That particular block, which we remove from the bottom, is basically our bandwidth, which we free up while focusing on low risk areas and using it for other emerging risk or the high risk areas. Dynamic risk assessment. This is continuous evaluation of the risk landscape with quarterly or real-time updates. So gone are the days when organizations are sufficient or internal departments would have been happy with the audit planning which was done for the entire year. Annual audit plans were being prepared. They were being approved by the board or the audit and risk committee, as the case may be. But in the current scenario, it's very important that the risks are assessed as we go along. So we follow a quarterly exercise wherein all the risks are being assessed. And in terms of audit planning, so that's like a 6+6 kind of approach. So the risk assessment is done on a quarterly basis. And in case any emerging risk or any key risk which needs to be included in the audit plan, that kind of flexibility is always there. But broadly, the audit plan is finalized for 6 months. I'm extremely sorry, but okay. Forward-looking insights, proactive identification of emerging risk before they materialize. As I touched upon in the beginning, it's imperative for the auditors to have data-driven insights and support the organization in not only doing a post-mortem exercise, but also questioning them or basically, providing them insights or foresight with respect to emerging risk. Continuous improvement is self-explanatory, and this is something which is a facet of life and all our uh, life aspects. Okay. Okay. Now, why disruption? We live in a very VUCA world. I'm sure we have heard about this term multiple times, which is volatile, uncertain, ambiguous, and complex. So that's the world we live in. As we see that there are multiple wars going on, be it Russia, Ukraine going on for so many years, the war in the Middle East side, and the geopolitical tensions because of frequent policy and lack of uncertainty and lack of policy in the US markets. So it is having a huge impact onto the bonds and the yields market, the oil prices, and the overall industry as a whole. With respect to US being one of the largest defense supplier, there is also direct impact onto the defense sector as well. Uh, in the beginning, thanks to Vipil, he read a brief summary about my profile. So few industries were listed there, but broadly throughout my career, I have worked into two industries. In the initial stages, I worked in telecom, and for last 15 plus years, I have been working in the BFSI sector. And if you'll see, both these industries have evolved over a lot when I started working and as of today. So if we talk about telecom, majority of the revenue in the initial stages were coming in from the voice calls. Over a period of time, I remember it shifting to the messaging services. Then over a period of time, there were some additional value-added services which were added. That was sometime in 2008, 10 types, caller ringback tones or astrology, dating, those kind of stuff. Then in last 10, 15 years, it started the revenue streams also started coming in from the internet. And these days, I think most of these, voice, data, messaging services, they are all passe, and the majority of the revenue is flowing in from the data or content. So content is the king these days. In fact, I don't. I'm sure most of you will be having the cable subscriptions few years back, and most of you would have got it disconnected. It's a very normal thing in US. Within my home as well, I don't think we have been having a cable connection for last 3 4 years. So it's all OTTs and leveraging other media. And I'm sure the overall risk profile associated as these revenue streams or the product mix kept on changing would be on the radar of the internal audit function of all the telecom companies. What I also did and maybe I'll encourage you all to do it uh, once you go back or once you find time. So while preparing for this presentation, I looked at the balance sheet and the risk summary in the director's report for some of the listed banks and some of the listed telecom companies. So if you see it over a period of 3, 4 years, you will see a sea change or a paradigm shift in how the overall risk have changed. The summary itself, so if they will be talking about ABC 3 years back, 5 years back, now the risk profile have changed. Now we are talking about XYZ. So this is how the risk profile keeps on changing. That's why it is important for internal audit functions to keep a track of all the emerging risks and make sure that their internal audit plans and including all the assurance and the consulting services are sufficient enough to address those challenges and the vulnerabilities. I also spoke about the banking wherein I spent majority of my career. Again, 15, 20 years back, if we recall banking, it was all branch paved, completely decentralized. It was very manual, very transactional, but as we see it today, it's 100% centralized. It's anytime banking and it's omni-channel. You can bank via phone, you can bank via uh, internet, you can bank via your point of sale machines and so on and so forth. So and again, it leads to change in the risk profile. Okay, we have been speaking about disruption a bit. So high level, if we look at disruption, it also has got multiple types of disruption. Now, technological disruption, AI, automation, these are some of the buzzwords these days. Most of the organizations, they are trying to embed AI automation into their day-to-day business processes. They are trying to leverage data-driven insights. We are seeing a lot of startups which are more particularly in the financial services sector, largely NBFC, I would say, which are leveraging AI and making faster credit-related decisions. So all of that is happening. But again, the internal auditors or the risk management professionals, they need to evaluate it very cautiously while these models are being used. So I'll share 2, 3 examples. So recently, one of a very large consulting firm, actually it was a big four, which got a consulting contract in Australia. It was by an Australian government for around 400K. Somehow they used an open source AI tool, and this aspect was not specifically reported in the report itself. No disclaimer was made around that usages. And while it was being reviewed by the client or basically the government, it came out that many of the places, the citations which are quoted in the report, they are all fabricated. The data is incorrect. And it was all referred to as AI hallucinations, which is quite common these days. AI is still in nascent stages, it's evolving. But the fact is that uh, blind faith on all of these AI tools may lead to incorrect decisions, may lead to multiple errors, reputational risk. So, what happened subsequently once this was identified, this was highlighted that Big Four have to acknowledge the mistake. They have to even refund a part of the fees and issue a corrected report. Then all of these AI tools, when we listen to them, we always hear of the models on which they are trained at. Another problem with respect to these AI tools when these are embedded into our processes is on what data are they trained at. So one of a very large online retailer of USA, they had a resume screener in place and they have been using it for pretty long time, 8, 10 years. So very recently it came out that that particular AI tool for screening resumes, it very biased against women. And the reason is because the data on which it was trained or the data which was fed into that particular model, it was very male dominated data. In fact, are related, not in relation to AI or automation, but sometimes if you look into the pharma industry, many times some of the drugs or the blockbuster new discoveries which came into the India or other countries, sometimes it turns out that the entire patients or the subjects on which these were tested, they are all from developed countries which have altogether different healthcare system, different preventive medication and all of it, so they may not be as effective as they would have been in their home countries. And one more very interesting example with respect to usage of AI and the risk which internal auditors, risk management professionals need to be mindful of is with respect to AI or all of these bots. They basically going haywire. Now, this is very interesting. Uh, so, few years back, we saw a movie, Anthiran, Tamil movie Anthiran, or basically robot movie, wherein we saw how the robots took over the society and they were making some very absurd decisions and they made the entire society hostage. Now, it has not reached to that stage because AI in itself is in very nascent stage, but something of that sort happened. So, one of the organization, I think the name was Replit. They deployed an AI tool. They asked it to put a freeze on the entire production or any of the changes. Don't touch the explicit instructions not to touch the production data. But somehow that AI tool went haywire and it deleted that entire production data. That's fine. Errors may happen. It may even happen in case of a change management. There have been multiple instances of it. But what's more interesting is then when that tool was asked about as to what happened, it lied. It also started fabricating data, something which it has already been deleted. So all in all, what we are trying to say is that while the AI is being integrated into business processes, business decisions, it continues to be a black box. And it is important for an organization before deploying to assess all of those associated risks. Okay. Moving on to regulatory disruption, this is quite self-explanatory in case there is any new compliance requirements, new regulatory requirements which comes into picture. A very interesting case which comes to my mind is the recent ban by Indian government on all the online gaming channels. So you would see multiple apps or multiple apps, which were advertising very frequently on the TV regularly. Dream 11, Poker Baji, Rummy Circle, blah blah blah. All of them vanished in a stroke. But what's interesting, and I would like you to think few slides back when we were talking about attributes of risk, that it may be all interconnected. So this particular regulation impacted online gaming, but it has a direct impact on one of the apparel company, Adidas. Not sure if we have a chat window or the participants can question. I'll give 30 seconds. Can you think of what could be the impact on Adidas because of ban on online gaming channels? Kindly type in the messages. Hi Vipul.
Hi, sir. Just
Is it feasible? I think our all our fellow professionals, they can type in their messages, right?
sir, can we have this at the end of the Q&A session at the time of the closure?
Okay, no worries. I'll skip
Yes,
it. I'll share. I'll share.
sir.
So basically, Adidas was the official sponsor, and they were basically selling Team India, cricket Team India jerseys for 5,000, 6,000 rupees. And the moment online gaming channels they were banned, one of the official sponsors was Dream 11. They had to sell all their stock of those t-shirts which were selling for 5,000, 6,000, 7,000 at a very steep discount, 80%, 90%. So it's all interrelated. Okay, economic disruption. We spoke about. We talked about example of COVID, wherein there was a severe impact on the supply chain and shortages of semiconductor chips and how it impacted the automobile industry and the IT sector. Uh, Social disruption that basically includes our consumption habits, our behavior habits. Now, as we see, the most of the Gen Z and millennials, they are most of the time they are hooked onto the social media platforms. In fact, Instagram is one of the most important channel to be present for a brand to start sell to be visible, and more importantly also to ensure appropriate sales. Now think of its impact onto the traditional media. Print, I'm sure most of us would have stopped seeking the print version of newspapers in our homes, and we consume news via multiple other online channels. So that's how this gets impacted. Because of all of these disruptions, our risk profile changes, and our audit plans, our assurance services, everything need to be adjusted accordingly. Okay. These are some of the risks. We will not go through this one by one. And anyway, this is a very, very indicative list, and this is not comprehensive. When I talk about banking and financial services sector, you look at any of their risk taxonomy, typically it will go up to 100, 150 line items. So they go up. Herein, I would have lifted 25, 30, but they go into very, very detail, and that's the reason, you may have 100, 150. If I pick it up, operational delivery, stat, I think that's self-explanatory. Financial reporting, BCP, I think we have spoken about most of these in one way or the other. Okay, this is a risk impact matrix. Again, as you can see, I have downloaded it from Google, so this is available in public domain, but it has to be tailor-made or customized in line with an organization's risk profile, their own requirements. But what we are trying to highlight over here is that the risk need to be evaluated on the impact of the risk need to be evaluated on multiple factors. So this is very high level, but it may be financial, it may be non-financial. So on the extreme right hand side, you will see the impact in terms of legal repercussions. Then moving from the right hand side, the second column talks about cost. It may be read as financial impact. The financial impact, it may also be whether it's a P&L impact or whether it's a impact on the balance sheet in terms of understatement or overstatement. Then reputation impact, quality of service. So it may be, the impact onto your clients. One of my experiences, I saw that, the organization was dealing with two sets of clients. So it was operating not only in the retail channel, but also servicing multiple wholesale clients. So this particular aspect of the risk impact matrix was customized in line with those two attributes. So like if there was a risk event which may impact, let's say, 5,000 of the retail customers, then it's low. But if impacts 20,000 of the retail customers, then perhaps it may be medium, and so on. and so forth. But in terms of institutional clients, if it is impacting less than five, then maybe it's low. But if it is impacting, let's say, more than 5 to 10 institutional clients or wholesale clients, then it may be marked as moderate. So it need to be customized as per the requirements, and the category is also insignificant, minor. So different organizations I have seen in my experience using different. Some is keep it very simple, high, medium, low. Some use these kind of definitions and all. Okay. Okay. We talk about some of these. These are some of the critical emerging risks which I have highlighted. Artificial intelligence, automation. Uh, I gave few examples about the risk which are emanating from the AI and automation, and also lot and lot of more modernization or the technology developing, and I'm sure the innovation will be expedited because of AI being there. And few months, or I should say few weeks back, I was reading about one of the news article which talked about uh, Chinese player manufacturing mosquito drones. Now those mosquito drones are very very small. Now think of their impact onto the border securities. They may also be loaded with spy cameras. Now if there are mosquito drones which has got spy cameras, good bandwidth, good connectivity, think of the confidentiality, data privacy aspects into a boardroom meeting. It may be live streamed outside, and think of an impact onto the markets in that scenario. Think of the impact on hospitality industry, because your entire private life may go out of the window in case you have a such kind of nano engineering products which will become very common in the market. uh, ESG compliance, climate and ESG compliance, again, a large number of regulators across the world. European regulators are still front running it, but over a period of time, more and more regulators across the world, they are coming up and requiring to begin with the listed companies to come up with ESG related reportings. Now, there are multiple issues and the risk associated with the ESG reporting. Data accuracy, of course, remains the same. The sustainability claims, how do you evaluate that, and the environmental impact reporting. One another issue with respect to ESG related reporting is, or the environmental impact, that it's very subjective. It's not tangible in nature. So it's very difficult to compare. Say, for example, there is a shipping company. It has got a shipping vessel, and because of something, it spilled oil in the oceans. It impacted marine life. That's one side of the story. On the other end side, we have these carbonated drinks or soft drinks companies which are overutilizing or depleting groundwater table. How do you compare it? And think of it, for an investor or for these fund houses, have to, how do they compare these two aspects? So there are risks associated within it, and it's imperative again for internal auditors, risk management, to be mindful of those. Digital transformation, I think that's I've lifted as emerging risk, and it will continue to be so, but it's, I think, very uh, obvious. Okay. Now, we have spoken about risk-based auditing. We have spoken a lot about disruption, and we have also spoken about the some of the emerging risk. How do we deal with it? So these are the four areas which I thought I'll talk to you about today, and I'll share some of the journeys which I have learned in my current and previous organization. In case you are wondering, I'm taking a lot of examples from my previous organization because I spent around 10 years over there, and very recently I have migrated to the current organization. So I'm still learning about this organization, its methodologies, its business, and the overall environment. And but the previous ones was, of course, having spent 10 years, so I know a bit about it more. Okay. So, but more or less, the journeys have are quite similar in nature. Uh, okay. With respect to data analytics, now data, of course, data is the new oil. I spoke about my experience in telecom industry in the BFSI sector, and data is the new oil. The data can help you unearth a lot of things which are hidden, which may not be identified or revealed during the routine sample based testing. So, in the same breath, I would also say that the data analytics teams exist, they support internal audit or the risk management function. They have come a long way. They have made a good beginning. As I said, the different organizations wherein I have uh, gained experience, they are in different stages. But more or less, I would say that most of them are in very nascent stages. Uh, it's still a far cry from when we talk about predictive analytics or identifying some of the risks or the appropriate foresight. So that's something which is few years away. But I'm sure that with respect to more AI and automated tools driven at our hand, more and more digitization of business processes and generation of digital data, it will be easy over a period of time. However, what we have done is that to support this coverage of all the emerging risks for two things, we have embedded data analytics into the periodic risk assessment exercise. So while we risk assess our audit universe and each of its audit objects, there are multiple aspects or multiple data points which are considered. All of those are fed into our proprietary models. They generate data. I'll give you some glimpse of it in the subsequent slides, what kind of data I'm talking about. So that will help us assess all our audit objects in a more rational manner, I would say. In addition, we also leverage data analytics very extensively for the audit engagements wherever it is feasible. And we also track the usage of data analytics as one of our KPI. So the report which goes to the board, it also tells the percentage of audits wherein we have used data analytics, the percentage of audit observations which emanated out of data analytics, and we also analyze internally for our own use as to whether this observation would have been identified if you due to our traditional audit procedures or not. So all of this is us helping us to become more mature, and we further embed those learnings into our data analytics team and strengthening our data analytics proficiencies. Okay. uh, Technology expertise, develop audit team capabilities in cybersecurity. Now, as you'll notice, all of these 4 5 things which are lifted over here, cybersecurity, cloud computing, they are core technologies. If you go and look into the market, the tech auditors are in very high demand. I've also seen that over a period of time, the percentage of tech auditors in an internal audit function have grown from less than 10% to some of the great or mature teams. I've seen it growing up to 30 35%. And again, one of the KPIs is that why tech integrated audit is not being done in this particular area. So considering the resource constraints, considering the additional demands, considering that more and more audits need to be tech integrated and would require tech support. How do we go about it? So we started training all our operational auditors, and over a period of time, we have reached at a stage wherein most of our operational auditors, they are hybrid auditors. So the technologies which are lifted over here, they are very high level. But what we taught our operational auditors is to take care of all the ITGC, be it the user access, be it the incident, be it the change management, be it the DR related aspects. We taught them about the application controls. We taught them about all the interfaces, the data flowing from one application to another and what may go wrong. Think of again all the five control objectives which we discussed: unauthorized, incomplete, inaccurate, and so on and so forth. How it helped? It basically freed up the bandwidth of the tech resources to focus on all of these core technologies. So it was a win-win situation for everyone. Everyone got learned, everyone got moving up in the ladder. The operational auditors became hybrid auditors, managing most of the, uh, I would say, low tier tech audit related aspects. And the tech team can focus on the core tech aspects. However, again, I would say that herein, one of the learning has been that technology never stops surprising you. With respect to interfaces, we have experienced that it's very frequent that we have to again run back to one of our tech audit buddies to seek support from them, because it's very dynamic in nature, and every now and then we come across some of the aspects which we may not have taught, or which are not applicable, or something which is entirely new, and we are not able to gain appropriate assurance. Okay. Next is strategic thinking. It is important. We have spoken a lot about it, but how do we do it? There are communications, but if you do a deep dive, if you do surveys, very frequently you will find that that's not sufficient. Many times, in more importantly, in case of internal audit function having large teams operating in different verticals or legal entities or business units, they may not have an understanding of the full business strategy. So what we have done with respect to that is that we frequently invite key business leaders from the business to participate in our audit conferences, internal audit, internal team audit conferences, to participate in our team meetings and provide a view over the business strategy, where the business is going, what is the direction of travel, where the help is required. So that really helped our internal audit folks to gain an understanding of the business strategy. The last, cross functional. Uh, the first slide which I displayed, it spoke about independence, and I mentioned that independence is a state of mind. Now we are independent, we are the third line of defense, but that doesn't mean that we stop talking to everyone. We remain independent. Uh, these days, it's very imperative that internal auditors need to have a very cross-functional collaboration. So we have seen that in actually all the BFSIs, you will see multiple forums, formal, informal, wherein they coordinate with the IT team, especially CISO or BISO, whatever nomenclature you may use, the head of legal, the head of compliance, and the head of risk. They all come together. They not only share updates, but more importantly, they discuss all the emerging risk and how, in a coordinated manner and a very holistic approach, can be taken to address all of those emerging risks. So those are four areas which which I have seen in my past experiences, and which have been really working for managing these emerging risks. Okay. So this is the third aspect. I spoke about four aspects. So this is the third aspect which we'll be talking about audit universe and risk-based audit plan. This is mostly a copy paste from the SIA 220 conducting overall internal audit planning. Again, we will not be going too much into the theory and we'll be covering the key aspects. So on your screen, these are the three key elements when we talk about an internal audit planning. And herein we are talking about the planning at a plan level. So there is a separate SIA which talks about planning for a particular engagement, but herein we are talking about the overall internal audit plan, be it annual, quarterly, or half yearly, as the case may be. The three bullets on your screen which are highlighted. So first is comprehensive. The plan need to be comprehensive. That's very important. As we go and start auditing any particular process, this is the first thing. Say for example, if we are auditing compliance with laws and regulations, the first question which we ask of stakeholders is how do you ensure that your compliance repository is comprehensive? So in the same fashion, it's imperative for our audit universe to be comprehensive, encompass the entire entity, and also it may be multi-directional in nature. The example which I'll be sharing later on, so it will have those attributes. What I'm talking about, the business units, legal entities, geographies. So think of an organization which is operating in multiple geographies. It has got legal entities, multiple business line, multiple products. So all of that need to be consolidated. Of course, the organization may have a decentralized approach that depends on the organization internal audit lead, but the idea is that each and every aspect need to be considered and the overall internal audit need to be comprehensive. Of course it needs to be updated, refreshed, revisited, and risk assessed at the beginning of the plan period. The plan period, depending on the organization, depending on their risk appetite, it could be annual, half yearly. However, as we discussed, in the current dynamic environment, most of the organizations no longer rely on a annual plan period, and they, they refresh it more frequently and ensure there is flexibility within the audit plans. Herein, I have highlighted only one aspect. Point B, alignment with organizations' risk assessment, including risk mitigation measures. Now, this may be applicable more in case of mature organizations, more particularly BFSI and or those organizations which have got a three lines model, or wherein the management is quite mature and they have done their own risk assessments. So when we are assessing our own audit universe and the individual auditable process, it is important that we calibrate it with the organization's own risk assessment. So it shouldn't happen that, let's say for example, we take any particular process, procurement, which is a very industry agnostic. So the organization feels, or the management or the first line, whosoever have completed the risk assessment, they feel that procurement overall residual risk is medium or low. But on the other end side, our risk assessment, which is done at a very high level and more of a desktop exercise, it is leading to a result of a high risk area. So we need to do a calibration. We need to be mindful of all the risk mitigation measures or the controls which have been put in place by the management. In fact, I would say this is a treasure. If you are working for an organization which has got a mature risk assessment framework, be it driven by management or independent first or second lines, that's a treasure trove which must be leveraged for assessing and refreshing and revisiting our own audit universe. Okay, so These are again, picked up some of the key aspects which I have picked up from the standard of internal audit, which is promulgated by the our institute. Some of the key considerations which we need to be mindful of when we are refreshing our audit universe and doing a risk assessment. So, knowledge of the business, we have spoken about it. We need to fully understand what are the business, need to do a SWOT analysis, what are the strengths, what are the weaknesses, opportunities, threats. There are a large number of strategy reports, the board packs, which may be considered, to gain more information, and also the B point management and the stakeholder discussions. So these are very, very helpful. We touched upon it in the previous slide, but during the course of your periodic risk assessments, it's imperative to have uh, engage with all the key stakeholders, engage with all the management, because they know their business pretty well. They know where are we heading to, what are the key risks, what keeps them awake at night. So it's imperative to bake in their concerns, their ideas, their perspectives, and their thoughts when we are risk assessing. Also, it may not be sufficient, I would say that to have these management stakeholder discussions at a very, very executive level. But depending on the organization, depending on the timing, your risk profile, it may make sense to have more in-depth and granular discussions with the operational and the executive management, the people who are actually running the show. Of course, you will look at your audit universe in case it's complete and it has got all the elements. Then we'll do a independent risk based, which is the overall uh, risk based exercise which we are doing, and this is independent from what has been done by the management, as we saw on the previous slide. Technology deployment. So this is again one of the key considerations while we are assessing a particular audit object. So there may be multiple things to be mindful of in technology. You may think whether the system which are being deployed, they may be industry standards, Oracle, SAP, or it may be a homegrown ERP or something which has been which is a legacy system, and it may be prone to more errors, it's more flaky in nature, and which has been kept live somehow by adding patches and patches and patches. So on the one hand you had that kind of system, on the other hand you have a very off the shelf and fully customized industry standard. So the risk definitely in the earlier one will be pretty high, uh, whether uh, the system or the application is hosted on prime, whether it is hosted on cloud, then to what extent there are any incidents, if any, um, are happening. So we may look at the incidents within a particular application, how frequent it is breaking up. Oh sure, one second. I think I Okay, you need to give me a minute while we talk about the example. I'll showcase you about the incidents. Resource availability. Of course, while we are planning our overall audit plan, we need to be mindful of the resources. We spoke about that resources within any business, and more particularly the internal audit, they are finite, so they need to be used pretty judiciously. So the outcome of the risk assessment done by the internal auditors is on the one hand side. Ideally, we will like to have a risk-based internal audit plan wherein the risk assessment tells us these are my top 10 areas and I would like to do an audit or have some projects or engagements in that space. But any specific local regulations or local compliances, then that which are applicable on internal audit as a function, they of course takes precedence. So how we would do is that while framing our internal audit, we need to see. So, if we are operating in a multi jurisdiction country, there may be certain regulators saying that I want this audit to be done on a yearly basis or a biannual basis. So definitely, whether you have resources or not, whether based on your risk assessment, it may be code at a lowest level, but still, since it's an obligation cast upon the internal audit function, it's imperative that that particular audit object continues to feature in your internal audit plan. So you'll still do an audit despite it being rated as low on your risk assessment. So you start with the overall bandwidth. You look at what are the audits which I must do for whatever reason, be it management request or more likely because of any compliance aspect. Then whatever is the bandwidth or the resource which are available, I'll start filling it on the basis of the output of my uh, risk assessment. Regulatory statutory expectations, I think I've already covered. So we have got a comprehensive multidimensional audit universe which lift down all the audit objects, which covers each and every facet of the organization. We perform an independent risk assessment considering multiple factors. Then we consider all the residual risks. We consider the regulatory statutory requirements. We also consider the management risk. And finally, we formulate our internal audit plan. Okay. Uh, Give me a minute, please. Let me share you how we do it actually. Okay, Vipul, is it visible now?
Yes, sir. Yes.
It is visible. So, but can you zoom it a bit?
Sure. Better?
Yes, sir.
This is just an example of how to ensure your audit universe is multi-directional and it is quite comprehensive in nature. It may have multiple levels and it need to be customized based on the organization size, scale, the jurisdictions or the geographies where it operates. But this is a typical example, and I have chosen some of the industry agnostic areas. So at L1 HR, we very every organization has got an HR function. Within HR, if you look at, I mean, this is not complete, but as this is an example, but if you think it from an employee life cycle perspective, you will have talent acquisition, which includes your hiring, onboarding, background verification, those kind of stuff. Then you have talent development over a period of time, training, learning, development. You also have your performance management discussions. Then at some stage, you'll be offboarding it, and in between, most important, the payroll. So now, if there is an organization wherein the payroll function for the payroll function is quite centralized, fitting in one of the shared services for all the geographies, for all the legal entities, then it's pretty simple. But if it is decentralized, North America, APAC, Europe, so you may have it on an L3 level. Then further, If it is country specific, legal entity, depends on the level of centralization and decentralization. So you talk about your functions. Within the function, you ensure what are the key processes. Within the key processes, then you think of country and the legal entity. Also, same is the case for technology. Again, this is just an example. We have not even touched the FDLC over here, but yeah, this is the example how to ensure it's complete. Also, what we also do is that to ensure comprehensiveness, we we do three sanity checks, I would say. So one is it should mirror my organization structure. So if I look at my overall organization structure, I should be able to see. So if I pick up the let's say chief HR officer in my organization uh, and keep on drilling down, I should be able to see that each and every person which is appearing over there and their respective roles and responsibilities are covered in one or the other areas or not. If not, then definitely that's a gap which needs to be updated over here. So that's one. Second is very straightforward. Each and every line item in your financials that needs to be taken care of. There are some of the areas which you may not actually the organization structure. Frankly speaking, I would say the organization structure will cover each and every aspect. Even some of the generic ones like operational resiliency or the risk culture, those kind of stuff. And the third is this is more applicable in case you're working in a very mature organization which has got a three lines defense. So if the management is monitoring their own risk of its own, they are doing their own risk assessment, they have got a risk register in place. So it's imperative to see what are the top risk as per the management and whether I have miffed it or not. So if I am able to cover all the risks which the management is concerned about, which management thinks are critical, and they form part of my audit universe, then I think I'm sorted. Okay. So once I have lifted down all of my audit objectives, next is the risk assessment. What we have done is every organization has got multiple policies, and every organization would have got a risk taxonomy. I showcased an example of risk taxonomy. Of course, policy is something which is very self-explanatory. You have a policy for information security, background verification. You have a policy as simple as T&D, procurement, and so on and so forth, and the multiple risks which are emanating from it. So, by a combination of the policies which are in force, and by looking at the risk taxonomy, we pick up the key inherent risk factors. So, say for example, with respect to payroll, and of course, it will remain same for all of this. Actually, it may not remain same. I'll give an example. So, with respect to payroll, I'll say that data privacy is important, information security is important, vendor dependency. Now, herein it may differ. It may be the case that for North America, the payroll processing for North America is outsourced to a vendor, but the payroll processing for APEC is done in house. So, when I am populating the inherent risk factors for both these two audit objects, I'll mark the inherent risk factor pertaining to vendor differently. If there is any model, so most of these insurance companies or the portfolio management company, they have got a lot of models. So think of model as how do we arrive at our pricing, like actuarial models which define the insurance quotes. So if there is a process which has got a model embedded into it, then the policy pertaining to the models, the end user developed applications or EUCs or Excel spreadsheet policy, whatever name you call it, that comes into picture. So if payroll is not using it, then perhaps it's a low scored over there. So on and so forth. We look at the inherent risk factors. Typically, it may reach up to 15 to 20. That's what I have seen. So that means for each of the audit objectives, each of the audit object, I'll be populating it for 15, 20 attributes or different kinds of risks. Then the control environment. What are the control environment? Now, herein, there is always a matter of debate whether the control environment should be for the audit object as a whole, or the control environment is for individually risk, which we have quoted, but it depends on the organization. We have, wherever I have worked or in my experience, we have taken a call to bifurcate it and evaluate it for each of the risk. There may be multiple reasons for it. Say, for example, uh, it's not that the management is managing all of the risk. The management for a particular process. For example, within payroll, if we have got one of the risk factor which is change management or FDLC. Now the management may have a very, let's say, moderate control environment overall in terms of managing the operational aspects, but there is a dedicated function for managing all the FDLCs or the change management projects within the organization. And that has got a very robust governance. So that's why the score for control environment for payroll will be different than the score for control environment for, say, operational delivery risk for payroll. So it all depends. And then, of course, depending on the organization methodology and the scoring, so you may score it on a scale of 1 to 3, 1 to 5, whatever it may be. Then you add some weights as per your organization, and then you come up with a inherent risk, the overall control environment, and what is the residual risk. So this is your true risk-based planning. Once you have arrived at this residual risk, when you review it, you may still feel that for whatever reason it may have come up to be low, medium, high, but you may want to apply an override depending on some of the tangible or intangible, or some of the discussions with management or other information which you may have. So at the end, you will have a fully comprehensive, multi-directional, risk assessed audit universe which you will use for your risk based internal audit planning. uh, that's what I wanted to share for today. And I'm happy to take any questions, please.
Uh, Thank you so much, Bharat sir, for the insightful and practical perspective. We now open the floor for participant. Participants may type their questions in the chat box, and sir, on the Dream 11 related, Dream 11 and the Adidas apparel deal. Some of the participants have stated that it was for the sponsorship of the apps. One of the participants has stated that it was losing an advertisement of a brand. So, could you just throw some light over there on that particular
Can I
area?
see the exact question? Not sure.
No, no, not a question, sir. आपने ड्यूरिंग द सेशन आपने जो बोला था कि ड्रीम 11 का जो स्पॉन्सरशिप लूज हुआ था बीसीसीआई का, तो हाउ विच ऑफ द कंपनी एडिडास को उसका क्या इम्पैक्ट आया था, तो ऑन दैट पर्टिकुलर वन थिंग some
Okay.
of them some of the participants have responded over there.
Okay. See, what I was trying to say is that uh, the Indian government, it banned all the online gaming platforms. Dream 11. which was the official sponsor of our Team India cricket team. Now, if you think from it, then this particular regulation, it was for a specific industry, and ideally it should be impacting only a particular industry. But I also mentioned that many of these times the risks are interrelated in nature. So so Adidas was selling Team India jerseys, and when it was selling Team India jerseys, it has got a Dream 11 logo onto it. But the moment all of these online um gaming platforms were banned by the Indian government regulation, suddenly it all turned out to be a dead stock. And something which was being sold for 5-6 thousand, it was to be sold for a steep discount. That's what I wanted to convey. Basically, the interrelation between or interdependency amongst the risk factors, and it was an external risk factor.
Sir, we have a question from one of the participants. It is, what are the new opportunities or growth areas do you see in internal audit in next 12 to 24 months?
So I think there was one of the slide which I shared wherein I spoke about how to tackle it. So this is an ICI seminar, and I assume that most of us we are operational auditors. None of us are so much tech savvy. So two things I would like to suggest is that enhance your IT audit skills. You need to go slow. Definitely, you need to gain a lot of experience. In the I am also pursuing CISA, but I would say that if you do CISA or some of the other related certifications, that may not be helpful unless and until you get an on-the-job experience. So it is important that you start learning towards it and start taking baby steps. Thankfully, with the support of AI tools and YouTube and some of the various online ed tech platforms, a lot of information is available to take you all of these aspects in a baby manner. You know, very easy manner. We spoke about two, three things. I would say that for an operational auditor, even if you get to understand the ITGC interfaces and the application controls, that's a good start. And with respect to other core tech areas, be it cybersecurity, cloud, network, information security, firewalls, I would say a good understanding is sufficient so that at least you can have a decent conversation with the CISO or some of the tech stakeholders. So that's one. Basically, enhancing your tech audit skills, and another is sharpening your data analytics skills. I'm 100% sure all of us are using data analytics in one way or the other, whether we have a dedicated team or not, a dedicated function or not. We may not be using specialized tools, but as far as feasible, we are using data analytics, even if it is a simple Excel driven. But keep on sharpening your audit skills, DA skills.
Sir, we have just one more additional question, I believe. Uh, I also urge the participants to type in your queries or questions if you have. The other question is, what are the top three actionable ways internal audit can demonstrate tangible values to management? What would be the top three? That is.
Sure. So that's an excellent question, and in fact, the whole premise of internal audit is that we need to add value to the management. So one I would say is that data analytics. We have been talking a lot about it in our slides. So over a period of time, and as I said that most of are using data analytics. However, try to use more and more of data analytics, not only for your audit engagement but also for your risk assessments. This will ensure that your all your energies, all your resources, they are focused onto the areas of highest risk. That will really help management to see internal audit as a valued contributor, seeing that the internal auditors are helping us in a manner whereby they are focusing on all the key areas of risk. And during the internal audit engagements also, they will also get to see some of the hidden anomalies which may not be feasible via sampled approach. So that is something which I would say is the management sees as a tangible value. One another example which I'll give is that there have been instances wherein we have seen that during the course of an engagement, we deployed deep data analytics, leveraged the multiple data sources, did some queries, came up with some anomalies, exceptions, presented to the management in the form of an audit report. So that's absolutely fine. But there are instances when management came back to us, which was a more win-win situation because we may be doing an audit over a period of, let's say, 2 years, 3 years, 4 years cycle or whatever the case may be. However, we saw management coming back to us and helping us and requesting help to develop similar kind of dashboards for their own continuous monitoring. So those are the areas which I would say would be very helpful to uh, support and demonstrate a tangible value to the management.
So I believe that's all from the Q&A part. Uh, so thank you, sir, and thank you all the participants for the engaging questions. We now conclude the Q&A session. Uh, I now propose a formal vote of thanks. Thank you, Bharat sir. What a phenomenal session. Your insights today didn't just inform us, they transformed our perspective on internal audit. On behalf of Internal Audit Standards Board of ICI, my deep gratitude to Chandrasekhar Chitle sir and CA Patwa sir for conceptualizing and leading this learning initiative. My special acknowledgements and thanks to Arun Agarwal sir and his team. To all the participants, thank you for your time and your active involvement. Tax audit season is behind us. Opportunities are ahead of us. Let us not audit for compliances, let us audit for impact. Wishing you all a wonderful evening. Thank you. Uh, that's all. Thank you, sir.
Thank you, Vipul, for all the nice words, and I would once again like to thank Internal Audit Standard Board and Arunji, Artiji, Veena ji, and the entire tech support team for having me here. Thank you very much.